Today, we are going to pull back the curtain on the financial health of Apple. And we're not just scratching the surface here. We're going to dive deep into the actual numbers to find out what's really going on behind all that staggering wealth. So, let's kick things off with a real head scratcher from Apple's 2024 financial reports. Negative $23.4 billion. That's their working capital. The money a company has on hand for its day-to-day operations. I mean, look at that. On paper, it looks like they're broke. So what's the deal? Is one of the wealthiest companies on the planet actually in some kind of financial trouble? For the next few minutes, we're going to put on our detective hats and find out what is really going on. Okay, so every good investigation needs a plan, right? Here's our roadmap. We're going to follow the clues, starting with Apple's short-term cash situation, then we'll track their long-term debt, take a hard look at their profits, and finally, uncover the secret to their powerhouse efficiency. Let's do this. First up, let's tackle that short-term health question. Can Apple actually pay its bills? This is where that huge negative number comes from, and it's our first major clue in this whole mystery. And the plot thickens. This is the current ratio. It basically compares what you own in the short term to what you owe, and Apple's is below 1 and it's dropping. Now, for most companies, a number below 1 is a massive red flag. So this is clue number 2 that something strange is happening. This just seems completely backwards, doesn't it? A company like Apple can't cover its debts? Well, the key to solving this mystery isn't about the cash it has sitting in the bank. It's about how insanely fast Apple can generate new cash day in and day out. And boom, here's the proof. In 2024 alone, Apple pulled in over $118 billion in cash just from its operations. See, when you're a cash-generating machine on this scale, those old-school financial measures, well, they just don't tell the whole story. All right, let's follow the trail to our next clue, long-term debt. Is Apple secretly buried in debt? Let's take a look. Okay, at first glance, this also looks pretty risky. Apple's debt compared to its equity is high, and it actually went up in 2024. To put that in perspective, for every $1 of its own money, Apple has over $5 of debt. But here's where it gets really interesting. A big reason that number is so high is because of Apple's own strategy. They buy back their own stock, a lot of it. We're talking over $95 billion worth in 2024. When they do that, it shrinks the equity part of the formula, which makes that debt ratio look way, way higher than it really is. And here is the number that really tells the truth. This shows that Apple's income from its operations could cover its interest payments more than 33 times over. 33! So yeah, that debt is actually very, very manageable. Case closed on that one. Okay, on to our third line of inquiry, profitability. The numbers show a little dip here, so let's ask the question. Did Apple actually make less profit in 2024? Well, the evidence shows their profit margin, which is basically how many cents they keep for every dollar they sell, did dip a tiny bit. It went from about 25 cents on the dollar to 24 cents. Now, that is still an absolutely elite number, but why the drop? And there's our answer. It wasn't because the business was doing worse. In fact, their income from actually running the company went up. The drop in the final number was mostly because of a one-time tax bill from the European Commission. It was an accounting thing, not an operations thing. All right, now we get to what I think is the most important part of this whole investigation. This is the real secret to Apple's financial dominance. It's absolutely legendary operational efficiency. This table right here, this is the engine room. It shows us how incredibly good Apple is at turning its products into cold, hard cash. We're going to focus on two key numbers: inventory turnover, how fast stuff flies off the shelves, and receivables turnover, how fast they get paid. Let's break it down. So let's start with inventory turnover. In 2024, Apple sold and replaced its entire global inventory almost 31 times. Just think about that for a second. That is an absolutely insane speed. To put that another way, the average iPhone or MacBook sits on a shelf for less than 2 weeks before it's sold. That slight slowdown from 2023, not a weakness. It was actually a strategic move to build up more inventory before some big product launches. Now for the other side of the coin, getting the cash. In 2024, Apple collected all the money it was owed more than 12 times. This means when Apple sends a bill to its partners and customers, that cash comes flying back in, on average, in less than 30 days. It's just incredibly efficient. So, we've examined all the evidence. We've looked at the cash, the debt, the profits, and that amazing efficiency. What's the final verdict on Apple's financial health? Well, the verdict is in. Apple is in fantastic financial shape. And the big takeaway here is that its business model, driven by that incredible efficiency and cash flow, is so unique that you just can't judge it by the normal rules. You have to look deeper to see the real story.
So, what's next? Well, to stay on top, experts suggest Apple needs to keep pushing into AI and services, continue its smart strategy of buying back stock, and, of course, make its world-class supply chain even stronger and more diverse.
And that leaves us with one final big question. We all know Apple as a tech innovator, a product company, but as we've seen today, it is an absolute mastermind of operations. So as we look to the future, you have to wonder, will its next game-changing innovation be a new gadget or a new way of building it?